Hi everyone, my name is Darryl Panes, CEO at As Good as Gold Australia, and today once again I'm joined by my brother Brian.
Thank you, Darryl.
And partner at As Good as Gold. And today we have a very special guest. I've got to say, Brian, I've got to say this, that when we've been very fortunate that we've been able to interview this gentleman more than once. But every time we have, we get this overwhelming response because I think this gentleman has he has a wonderful knowledge, the overall monetary system. And of course the history of money, how money works, and there are so many people out there who don't know that, are looking for that sort of information, and this gentleman explains it in a manner that is so easy to interpret.
Well, it's very, very specially, he talks about a practicality of money rather than the theory of money.
Yeah,
so
very much so.
Yeah, that's why he's so good at what he does.
Which is why I'm really, and we're both so really excited about having a chat with this gentleman today. So what I'd like to do at this point is introduce the founder and managing director, of course, of Matterhorn Asset Management and Gold Switzerland. I'm talking of the one and only legendary Egon von Greyerz. Good afternoon, Egon.
Good morning to you, gentlemen. Good to see you again, Brian. Yes.
Well, it has been a little while, Egon. In fact, I was only thinking about this morning and how much the world has changed in this period of time. So we're going back 6 months ago. The last time we caught up was in Sydney, of course, at the Gold Symposium. And great event. But I compare, how times have changed. I look back at that event and there were 600 people in attendance or thereabouts. That, of course, can't happen anymore.
No.
You can't have an event with 20 people, let alone 600 people.
How times have changed.
How times have changed.
6 months.
Yes. And I remember then we connected with Egon at a restaurant, As Good as Gold Australia. And the restaurant was overflowing, it was bubbly, everyone was excited.
Can't do that now.
Can't do that anymore. No. And then we got back to the hotel, and of course Egon had to fly out the next morning at some unearthly hour. I think it was something like 4 o'clock in the morning. But the point I'm making here is today you can't fly it. Egon had to fly back to Zurich in Switzerland. You can't do that anymore. And we had to fly back, go interstate, fly back to South Australia. We can't do that anymore.
No.
And so it has all changed. But the interesting thing about all of this is there has been a trigger that has caused this. And it's coronavirus, of course. And a lot of people out there right now are saying, well, this is all due to coronavirus. Well, that's not true. Coronavirus was the trigger.
It was the catalyst.
It was the catalyst.
Yeah.
And whether it had been a breakdown in the banking system, whether it had been a bank that had gone, a big bank that had got into trouble, whether it had been maybe North Korea and a resurgence there. Maybe it could have been trade wars escalating between China and the United States of America. It could have been a resurgence in the Middle East. It could have been anything. But the point was that our economy was in such a bad state. That's really the point, isn't it? The economy was in such a bad state. Our debt levels were through the roof. Our interest rates gave us nowhere to move at zero or negative interest rates pretty much all the way around the world. So the economy was very vulnerable. So it wouldn't have mattered what the catalyst was. The result would have been the same. And that's where we are right now.
Yeah, Jim Rickards would say the snowflake has just formed into a snowball and it's coming down the mountain.
Correct.
That's it.
Correct. Exactly. So what we're confronted with now is, globally, a massive stimulus package that governments are providing at the moment. It's like helicopter money. It's hundreds of billions of dollars in Australia. It's hundreds of trillions of dollars. It's trillions of dollars in the United States of America, and there seems to be no end in sight. Central banks, Federal Reserve is saying there is no limit to what we can do here. And so, but there has to be a limit because this money has to be repaid, one would think. Yeah. And so what I'd like to ask yourself, Egon, is this. Firstly, I'd like to ask you if we can just go back a little bit, and if you can confirm how the economy stood before coronavirus, and then, what we can expect to see happen now, from governments all around the world, how they combat this scenario, and how much debt we're going to have to generate to try and work our way through this. So if you could do that for us initially, let's have a look at pre-coronavirus and then look forward a little bit into the future.
Well, it's interesting, as you say, because here we met in a free world, at least free when it came 6 months ago, when it came to physical movement in Sydney, and here now I'm sitting on an outtop, totally isolated, and with my wife, luckily, and we have a place here and we have a good life. This is normally where we spend a lot of time in the winter, because it's also a ski resort, which also made it into a place that there is actually, you can ski down to Italy from here. I can see the Matterhorn from here. And of course, they didn't close the border to Italy early enough. So coronavirus came into this village too. Now it's been locked down for 4 weeks, or at least. So it's not serious, but there are a number of coronavirus cases here, not serious. Anyway, so here I am, and don't even know when I can get out. I mean, in Switzerland, as opposed to the UK, and I think in Australia also, Switzerland, we could go in the car and drive somewhere, but wherever we drive, there's nothing to do. You can't meet somebody. You can't go into a restaurant or eat something. No. So it really focuses the mind here. And as I said, we have lovely nature and enough food in the shops here. So we're okay, but what we don't know when this is going to end, and that's the same for the whole world. Sure, everybody wants to lift the restrictions, but nobody knows the consequences, second wave, third wave, etc. And nobody, they don't dare to do it. So therefore, we turn inwards now, and of course we can spend more time analyzing what the world looks like and what it will look like. And the good thing is also we can spend a bit of time with good friends like yourselves on Zoom or on Skype or whatever, and talk. And that's a wonderful thing. Without that, I mean, I've been taking place in many webinars and conferences, etc. already, and interviews. So that's a wonderful thing. So we're not cut off, at least.
Yes.
But coming back to your question, throughout my life, I always try to understand risk and understand the downside, and be whether I was in banking where I started, and in corporate life in the UK, and then in my investment life. And of course, since I've always been risk averse, I already in the 90s, I realized that this is going to end badly. Now, because of already then, the debt was growing, derivative bubble was massive. And of course, that's why then in 2002, when I had a private investment company at the time, we went into gold ourselves, and then recommended to the people we advised at the time, co-investors in different projects we've had. So we went into gold in a proper way then, when it was $300 per ounce, or 200 pounds per ounce. And of course, from the point of view of entry point into gold, that was right. But then the world continued to grow or the bubble continued to grow. So we saw then up to 2006-07, we saw the next crisis coming. We had one, of course, in 2000 already, the tech bubble, and then we got into the subprime bubble in 2006-09, and I mean, the world should have gone under then, the financial world. But I was surprised myself that they actually managed to save it with tens of trillions of printed money and guarantees, etc. I mean, the world wasn't far from collapsing, but the advantage then was, of course, that in 2006 global debt was 125 trillion. Interest rates were about 5-6%.
Yeah.
So they had some margin there to lower rates and print money. Now we've had a long period when interest rates are zero or sub-zero, and global debt has grown from 125 to around 265 trillion dollars. But then, as I see the big risk, sure, the debt can never be repaid, and it now is starting to grow exponentially again. But then the bigger risk is one, well, you have the unfunded liabilities, which is probably total in the world 500 trillion. 500 trillion. We don't even understand what these figures mean, do we?
No.
So there's big, nobody understands what it means. And then, but the derivatives, I still consider that the derivatives, the gross figure that the Bank of International Settlement here in Basel reduced from 1.4 trillion to down to 650. Sorry, 1.4 quadrillion to 650 trillion. They reduced it a few years ago, but that was just bookkeeping. I still think that we are at least 1.5 to 2 trillion in derivatives, and and that one is something will happen to the derivatives. But everything that we touch today is in derivative. Everything people buy is basically all the ETFs, all the interest swaps, all the foreign exchange is all derivatives. Very few, when people buy something, it's very, very seldom they buy the real thing, except for if we buy physical gold, which we understand you should do. So it's a fake world, and now we got to the next crisis. I always said that 2006-9 was a rehearsal, and the real thing is going to come. I did say back in 2019, when end of July, the Draghi again and the ECB repeated what he'd said a few years earlier: we will do whatever it takes.
Yeah.
And to me, that was the first signal that there's a problem in the system. Then the next thing was, of course, all the repos in the US that told us that there is a crisis. So we knew there is a crisis, that worse than before. There's an underlying crisis within the financial system, and they wouldn't tell us what it was, but it's clearly banks under pressure in the US. In Europe, we know that the European banking system is under tremendous pressure, and probably the derivatives positions of the US banks is just too big. With you have JP Morgan at almost 50 trillion. You have Deutsche Bank just under 50 trillion also. So these are you have to remember that derivative market works when people buy derivatives. And of course, it's incredibly profitable for all these banks that issue these derivatives.
Yeah.
But when people want to sell these derivatives, there would be no liquidity, and they will be worthless. And then counterparty fails, and then that's why the 1.5 or 2 quadrillion that I see as the gross figure, gross will remain gross when counterparty fails. So that's in not taking the big picture. That's the risk. And now, the next crisis started, rightly as you say, with a catalyst that was the ugliest catalyst we could have had.
Sure.
A pandemic which is affecting the world in such a terrible way, with businesses going down, people dying, of course, first of all, and then businesses going down, individuals not having money. We don't realize how bad it is. Most people only have cash for a couple of weeks, and most businesses, also service businesses, etc., they don't have a big cushion to fall back on. So that we're going to see massive failures. And then, of course, also in big industry, your airlines, we're seeing failures already. Travel industry, cruise lines, car sales, collapsing totally. So it's across the board, and this is not going to recover to the levels that we have seen previous to this crisis. So it's tragic for the world. And I've been forecasting this, and I said actually in January, I expect now that because technically you can't forecast the stock market from a fundamental point of view, or the economy. It's been a bubble for a long time, but they managed to keep the bubble growing by printing useless money or worthless money. But then technically it looked like at the end of January, to me anyway, that we are now going to get the turn in the secular bull market to a secular bear market, and that it happened later in February and March. So Yeah, but the turn was coming, but that we could get such a horrible and ugly catalyst, I hadn't forecast. I had looked at population growth historically before and said that, you know, it's been a spike from a billion to 7.5 billion in over 150 years, and that spike will always be corrected by a spike down. So I expected us to have some crisis, war, famine, pandemic, but I didn't expect that to be the trigger of the crisis we're seeing now. And that, but the interesting thing is, I should have done, because you know, when things we're going to see the end to probably the biggest bubble in history, and whether this is just a 300-year cycle from the early 1700s, or whether it's a longer cycle, I don't know. I think it's a very big cycle, and of course, you know, the trigger it shouldn't be just a bank collapse. It should be something totally unexpected. So thinking back, and you know, hindsight is the most exactable sciences, as we know.
Yeah, very true.
You know, so but anyway, you know, now afterwards, when I think about it, I'm not surprised that that catalyst was something as bad as we're seeing now, and going forward now, as you mentioned, that there is every single central bank in the world is now printing money. You know, the Fed and the U.S. government, I mean, they've already created basically 5 trillion. That's going to be nowhere enough. But, you know, we have to remember, and I keep repeating that, this is money coming out of thin air.
Yeah.
It's no real money whatsoever. So if you print money, that's been the same for a long time, but, you know, you get diminishing returns on this money. The more you print, the less it'll be worth. Now, because of manipulation of so many markets and the petrodollar, etc., the dollar is kept much stronger than it should have done, and it will collapse like all other currencies. But of course, still, if you measure the dollar against the Swiss franc, it's down 80% since 1971. If you measure the dollar against gold, it's down 97 or 98% since 1971. So, you know, the dollar has collapsed, but still people still think it's strong. But it's, you know, but the money that they're printing now, I mean, it's has zero value, as I said, because, you know, and if you, it's like in Zimbabwe, if you stand next to, Mugabe stood next to the printing press. He grabbed the money first, spent it quickly, or exchanged it to dollars or whatever, so he could use it. Once it reached the people, it had zero value. And that's what we're going to see here also. This money that is being printed by the Fed, by the ECB, by all central banks, has zero value. And therefore, it's not going to save the world in any way whatsoever. It has a psychological effect, and everyone they declare a new package like the Fed, etc. The stock market goes up a little bit now, and everybody's happy. And every time the coronavirus deaths come down a bit, thank God they do, but that's only because we're all isolated. Yes. But, sorry, you're showing a...
Oh, no, I was going... No, this is in support of what you were just saying, Egon. This is a $100 trillion Zimbabwean genuine currency note, 2008. But so you could imagine that was $1.20 Aussie. That was its value at the time. But what you're talking about in this excessive printing of currency, I mean, there seems to be no limit, but, you know, and people say, well, this could never happen in Australia. It could never happen in the US. They probably didn't think it could happen in Zimbabwe or Venezuela either. But this is really what we're looking at, isn't it? This is where we're heading.
Totally. Most people don't understand what inflation and hyperinflation is and what causes it. People think that inflation, very often normal inflation can be demand-led, i.e. that high demand of goods or services creates inflation. That's possible, but most of the time, even normal inflation, but especially hyperinflation, that is a currency event. Hyperinflation only arises as a result of debasement of the currency.
Of course.
And the
Yes.
currency is only debased because of money printing. So, and it's obvious that we have to have hyperinflation now. As I said, we're looking at these packages, a few trillion there worldwide, and that's just the beginning. Just you wait until the banks get under pressure, and just wait until the bond market, like the US bond market, is going to come under pressure also, because in the end, the only buyer will be the Fed. And the same as Japan is the only buyer of Japanese government bonds. And that's going to be the same with the ECB. So, when there's no buyers for these bonds, of course, there'll be, and everybody who owns these bonds are going to sell them. And then you will get tremendous pressure on the bond market, interest rates going down, up, bond prices down, interest rates up, which means that there'll be more money printing, and it becomes a vicious circle, because the central banks have to print more money to buy these bonds that come up for sale. And that's then going to lead this currency debasement that we have seen already over the last 100 and the last 50 years, as I just mentioned, since the 70s. But now it's going to accelerate. And as it says, so that's why people can't say, well, house prices are going to go down, stock market's going to go down, it's a deflation. Yes, that's absolutely right. We're going to have deflation and inflation at the same time.
Yeah.
It's going to be deflation of all the bubble assets that I call them, which is the housing market in particular, housing markets like the Australian one, which is a massive bubble, and the stock markets and the bond markets. So that's why will see deflation, but you will see inflation, hyperinflation, caused by, as I said, the debasement of the currencies and the value of money going down, and that's going to affect goods and services, food and services. So we're going to see overall a massive hyperinflation. And people say, well, that'd be good, I can repay my loan, etc. But you don't, you might not have a job, and interest rate might be 25% or more. I often mention that, I saw this on a much smaller scale when I lived in the UK in the 70s.
Yeah.
My first mortgage went up to 21% interest rates in 74. 21%.
Nobody want to go through that. Absolutely not.
Oh, I can remember it. Yeah.
More so for you than me.
Yeah. What really intrigues me about this inflation and devaluing things, the more of it that you've got, the less it's worth. Most people do not understand that when it comes to money, but if you speak to them give them a simple illustration, whether it could be apples or oranges, and I'll share this now, but if you've got a glut of oranges in the market, it's just been a wonderful season for oranges, so you've got, all of the supermarkets are full of oranges. What happens to the price of oranges? They go down because you've got a lot of them. Yep. And it's, but in vice versa to that, if in fact there's a big major frost and the oranges are scarce, what happens to the price of oranges? They go up. This is a pretty simple process, but it's the same with currency. If you print too much of it, it's worth nothing or much less. And so I keep on giving this illustration to people all the time, and sometimes it needs that. It's a little bit like people say to me, well, gold, what makes gold go up? I say gold doesn't do anything. It just sits there. All it does is emphasise the terrible job that governments have done with debasing currencies. So that if you have twice as much money in circulation, if you reduce the value of that currency, you need twice as much of it to buy an ounce of gold that you would have needed. So in other words, if an ounce of gold is $2,800 now, and you debase your currency by 50%,
it'll go to $5,600.
It's going to cost you $5,600 for an ounce of gold. And people understand that. But I guess the thing is, Egon, most people don't want to understand this because it's alien to them, and it is, if it's true, it's certainly going to impact on their standard of living and the way they live. But that's true, isn't it? It is going to have an enormous impact on the way they live. We remember the story of Tan's Taffel. There is no such thing as a free lunch. Really.
Absolutely, there is no such thing as a free lunch. No.
But continue, Egon. I just wanted to emphasise that because your point is very clear, makes enormous sense. But how far? So how long can they continue to debase the currency as they are now before it becomes evident to all of us that our currency is devaluing all the time?
I mean, the world is in such a tragic situation now, sadly caused by governments and central banks, which are normally the masters of government, especially the Fed, of course. And they have caused this. They are, and now the villains, the central banks. I mean, they are the villains. I mean, they have created these enormous bubbles in the world, and now they're now in charge, which they always have been. They're now in charge of solving the problem. So the villains now, all of a sudden, are running the court or the judicial system, if you want. So, and how can they do that? Because they created it in the first place. Sadly, there is no one. I think that's totally wrong. As I don't believe in central banks, they should be abolished. They have no function whatsoever. Let the market find its own true level, and let the monetary system also find its true level. Supply and demand. There's high demand for credit, which there is now. Interest rates should be high, because there's always a limited supply if you keep to the discipline of not printing endless amounts of money. Because then, of course, there is no real system anymore. Then it's just a fake system, because if you abolish the laws of supply and demand and just print endless money, so then it, of course, it's not going to function. It has to blow up. And now, as I took the example in my last article, but why can't you can, why do we just print 5 trillion or 10 trillion? The thing is, for each individual who now hasn't got a job, his business is going down, or he's losing it, of course, for him, I understand he's got to be helped. But if you add up every case that has to be helped, industry, individuals, etc., you have to ask, where is the money coming from? Because each individual never asks that, because he wants to be safe, so his money he can have. But if you add up the totality of all of this, you have that money. Where is it coming from? Well, we know where it's coming from. We just said it, coming from thin air. It's coming from a computer entry or a few zeros. So can you hear the helicopter behind there?
Yes, I can.
Okay. I closed the window.
It's dropping money out of the sky.
Well, not.
Just hold your hands out for the moment, Egon, and just catch us as it filters down.
Sadly, it's more likely to be cement or building materials, because this is a village here, Zermatt, that has no cars. So and in the off season, like now is the off season, they do a lot of construction work, and a lot of the transport is done by the helicopter, and that's why. So sadly, it's not.
That's what it was.
Or fortunately, there's actually no money coming. It's just like bags of cement or whatever materials. But anyway, coming back to it. So yes, of course we will want to help the individuals, but if we help everybody, then, as I said, we are printing money that doesn't exist. Consequently, that money, once it's been used a couple of times and circulated, it has zero value. And because otherwise, why can't we just print the whole of the GDP of every country? People stop working, you give them the money, because if printed money works, why not just give everybody money, and nobody has, and we buy our goods and services from some other country, China, whatever it is, so we don't have to do the work ourselves. Because if you take this to its end, that's exactly the effect of it. That why can't you print more money? But so therefore, you and I and people who study this, they know that this money has no value, and therefore, initially, the world doesn't react. Stock markets, are just happy, a bit more printed money, hopefully going into the stock market from their point of view, from the investor's point of view. But the gold market and the currency market, etc., haven't really reacted either yet. That's going to come all of a sudden, out of the blue. You're going to see gold price shoot up, the silver price shoot up, you're going to see inflation going up dramatically, and that's coming very soon, because the money printing now, that's just started. This is nothing. It's going to be much bigger, because as I said, when financial institutions come under pressure, bond market come under pressure, derivatives come under pressure, etc. So time and time again, I have to say, I'm not a prophet of doom and gloom. It sounds like it. I'm not a pessimist, but I can read it. I can read the facts. I can see what's happening, and it's inevitable. The risk is there. The risk is that this is going to end very badly, and the people, the people who get a bit of money now, the people who are helped, that money is going to disappear in a very short period of time and be worthless. So how is this going to end? Well, that's where probably people will say that I am gloomy there, because I can't see, and I've said that for years, I can't see this ending well, because you now have the biggest financial bubble in history that's been going on for, well, in this period at least 100 years, since the Fed was created in 1913. There is absolutely no solution. That is 100% clear. We've just gone through now that money printing cannot be a solution, because if you print worthless pieces of paper, how do you think that can save the world? So therefore, it's a fallacy to believe that the central banks are actually helping the world now. They have no other option. Interest rates are zero already. I've said, mortgage in Switzerland, 10 years you pay 0.9% or whatever, as an example of, money is free. And no wonder that property markets are bubbles everywhere. So this, printing money is not going to solve it. You cannot lower interest rates anymore, and that would anyway be artificial and manipulation and the wrong thing, because we should actually let interest rate be governed by demand for money, and demand for money is now massive, and therefore interest rates should be extremely high.
Yes.
I remember then 20% in the 70s, 20% will be nothing in the coming era, because if bond markets are worthless and a lot of money is worthless and there's a massive demand for money, it could easily be 20% or more. So I think we are now, the world is in for a horrible downturn, economic downturn, which is obviously, it comes from the bubbles in markets and in financial markets, and the bubbles in asset markets, and that debt, the world debt of 265 trillion plus and I think we can throw in the derivatives, whatever the level is, 1.5 quadrillion or 2 quadrillion, whatever it is, because that banks will have to print to settle those also, the central banks, because they will materialize, the risk will materialize, and the bank will have to print also to save the derivatives, because they're not going to save it. But so therefore the money printing could be endless, but in the end the debt has to implode, and whether that's, as I said, 265 trillion plus a quadrillion or 2 quadrillion of derivatives. You could, let's say we talk about a total of 2 quadrillion in debts, and once the derivatives are materialized, and of course that will, number one, create hyperinflation. Number two, we will see total implosion of debt and credit. And once credit implodes, so will, of course, the assets that the credit was supporting. So that means that asset markets will implode also. So that is people talking about a reset and revaluing gold, etc. Countries might try, the US might try to come up with a crypto dollar and then revalue it, and revalue gold, etc., and try to fiddle the situation. Whatever they do, an alternative currency is just another fiat currency, another fake currency. It's not going to solve anything. So they'll come up with these solutions. They will last for a few months if they do, and China and Russia are not going to agree to it anyway. And then at some point you'll have the next reset, which is the collapse of the currencies and the metals reflecting all this money printing that's taken place. And the world will come down to a level which it hasn't seen for a very long time, because we live now in a false economy and in a false world built on material things that nobody could afford to pay for, with borrowed and printed money for, and everybody's had false values, also real values of the real moral and ethical values, and the family as the kernel of society. That's all gone. So in some respects, it's a good thing, I think, to that is going to happen. But the transition will be horrible, and a lot of people will suffer. But this is the world needs. We need a reset for the world. Come down to a different level from this false level. And as I said, a lot of people, everybody, all of us, we will all suffer. And on top of that, we have a pandemic now. But so it's going to be a tough time. But that's the only basis on which the world can continue to grow, in my view. I.e., get rid of the debt by letting it implode and the asset and start again from a lower level.
Well, it is just history repeating itself anyway. I mean, it's not as if this is the first time this has happened. To this scale, yes, it is huge. But it's about every 100 years.
Every 100
see
years, and
a change of the baton.
That's right, and then you got every 300 years, where the cycle is, you go back to John Law and his principle in France of printing money on the Mississippi program. It's been tried before and it never works, but we keep on trying the same thing again.
Correct, yeah, but we don't learn. Well, they learn. They know the end result from all of this. Governments around the world, but it'll last for 100 years. And no one wants to go down as the worst prime minister or the worst president in history, so they just keep the process going. We've said kick the can a little further down the road and then whoever comes in next who wins the election, they've got to contend with
the same problem.
Yeah, exactly. I'm a bit sarcastic when it comes to governments, but I believe that their primary aim is to buy votes. And as you said, hope that they last at least during that period so they can pass it on, the problem. That's what they're doing. Nobody dares to take the real decision, because it doesn't work in a democracy. They'll be voted out because people are so used to now getting alimony. So they want the money, people, and they don't really care if the financial system collapses, because they don't understand that. They only think about their own situation, which is totally natural. Of course, you think about yourself. If you have a family who hasn't got any food, and no money coming in, of course they should think about themselves. But sadly, when you add up every single case, as I said before, the world cannot cope with this.
Egon, you've done a very good description of MMT, which is modern monetary theory. that's what you've been talking about for the last 15 minutes, and it obviously goes to show from your description how it doesn't work. And I always make a point too, and we're talking about dropping money out of the sky or printing millions and billions and now trillions. I mean, I will say that 10 years ago you'd never heard of the word $1 trillion, but now it's just commonplace. But if modern monetary theory really worked, right, and we could drop money out of the sky or pay out all these bonuses, let's look at the value of food production. If we drop the money out of the sky and we pay the farmers, right, we pay the farmers for the food, but they see the money coming from out of the sky, well, they'll make a decision to say, well, what about us? What about the farmers will say, what about us? Why am I toiling the soil, right, when I can get money for nothing? And so the substance here is that it'll never work, because people or farmers will not toil the soil if they can get free money and sit on their lounge chair and watch TV. You won't be able to produce the food because money comes from zero. What I'd like to know, one of the questions I do have, and time is getting on, is oil prices. It's fundamentally, we can see now that 8 months ago, oil used to be $60 a barrel, 55 to 60, hanging around there all the time. And in the last couple of weeks to 3 weeks, it's it went to minus, but it's averaging around that $10 a barrel to $16 a barrel. For countries like Russia, Venezuela, and the Middle East, of course, which produce the oil, where are they going to get their money from? How are they going to survive, in your opinion?
Oil, it's something that obviously we all follow the price of oil, and we are all users of oil one way or another. But as an investment, and especially lately, to me, it's been a binary bet. It's an either-or bet, because on the one hand, if the economic situation turns down the way I expected oil to come down dramatically, because there will be no demand, and there are so many countries that have a vested interest of pumping it out because they need the money, especially the Middle East, Saudi Arabia. They need the money because they're spending too much in relation to their small economy, and then you have Russia needs the money. America, of course, has wasted trillions on fracking, and all of that debt is just going to again implode and be totally worthless. So on the one hand, as I said, coming back to oil, I've seen it coming. It should come down. That was my forecast, but you always had the risk of a revolution in Saudi Arabia, a Strait of Hormuz being closed, and therefore oil going up to $150. That's why I call it binary. Go to zero, go to 150, depending on economic circumstances or geopolitical circumstances. So therefore, I've never seen it as a good low risk investment. But from the point of view of these countries, this is exactly what we're talking about for the world. Saudi Arabia will be a disaster, total disaster, and there's always a risk of social unrest there, and of course they're suppressing it all the time. But so that's high risk. Iran is a disaster; they can't even export the oil they produce. Russia is the other country that they're used to hardship. The Russians, so I mean they'll have a lot lower income. But they will live with it. But the Americans are not going to cope with it, of course. But on the whole, every oil-producing country is going to suffer dramatically, and so that adds to the problem. And we have, as I said, massive debts linked to the oil markets also. So that's another problem. And it becomes a vicious circle, all of this, of course. Fantastic. Yeah, we have, I just bought some oil because I also, I have a house in the UK where I've lived a long time, and I just bought some oil, and it was almost a third of the price that I paid back in December. So,
Yes.
So from the consumer point of view, especially when, on petrol or on gas, you have high taxes in many countries, but if you don't have high, like on domestic fuel, you don't in the UK. So the price was down by almost 2/3, and of course that's going to help consumers. But overall, the oil market is another symptom of a crashing world economy with a lot of countries suffering, a lot of people suffering. So, but to come back, let's finish on a better note than because we will have tough times. It will be hard for a lot of people, and Corona is not going to make it any easier. That's for certain. But there will be, as I have said before, there are other values which are important, and they will come back, in my view. There's so many good things in life that are free, assuming that at least you have enough food for the day. But which is obviously a condition for decent living. But you have nature is free. I'm sitting looking out over nature here, and there's beautiful nature everywhere. So nature is wonderful and free. Books are almost free. Music is free, and conversation. We're going to have more time, spend time with the family, spend time with friends, etc. Now, and that's going to improve the quality of life. So rather than we've had too long a period for chasing the golden calf now in the world, and that's not been good for any of us. And having all these machines and being on your on your iPad or iPhone all the time, and you don't even have time to talk to the one next to you, because whoever comes in on the iPhone gets priority. You've got to WhatsApp message or whatever it is, you've got to reply to that rather than answering the question or talking to the person next to you. So that's a crazy world, and I'm quite pleased that that's going to go away and we get back some sound values again. So I think that will compensate to some extent for the material values that we will lose as long as people, and that's not going to be easy, as long as people have enough food, and there will be food prices will go up, and that'll be a problem. But overall, I think we're going back to better values, although the transition will be tough, of course. And so that's the positive side of it. I think that in the long run, that's going to be important for the world. We need that. We need to get rid of this debt. The only way to get rid of it is by it imploding. So we need to get that down to basic levels again. And the world can only continue to grow, with new green shoots from that level, not from a debt level of quadrillions. There's no way that the world can soundly grow from here. And so this is necessary, what's happening now.
As it always has been.
As it always has been, it comes back around, doesn't it?
I know that you've got a point that you wanted to highlight to Egon there.
Well, yes, Egon, it was rather humorous when we were in Sydney, and just before you spoke, I think the gentleman that spoke before you gave a presentation on how much gold and silver that he would suggest owning as a person, right? And it's not just that speaker. I know Ray Dalio and a lot of investment people will say gold, precious metals, 5%, maybe 10% of your portfolio. But it is very interesting. As you know, we've just had a drop in the Dow Jones and, of course, in our own markets over here. So I went today, I actually looked up what the drop was on the banks, and the banking community in Australia dropped by about 40%. These are bank shares. So the banks dropped by 40%. I also looked up BHP. BHP is a very common stock over here. That's down 25%. So you can say an average of 30% down. Then I looked at the price of gold. And in the last 2 months, it's been a remarkable growth phase. And even in the last 2 months from the drop in the Dow Jones, gold is up in Australia by 5%. It was up 10, come back a bit, so it's at 5. But then I look at the comparison of this investment portfolio of 5% in precious metals. I know you disagree with that. And the comment was, when you got up on the stage, you said, am I the one living on another planet? Because it was all about people saying, or investment people saying, 5% is all you need. I don't believe that. I've never had believed that. I just want to know from you what your thoughts are. How much gold and silver? How much gold should you have in a portfolio? Especially now that we've seen that banks are down 40%, BHP's down by 25%. What do you put in your portfolio? What do you recommend?
There are two different things. What I put in my portfolio and what I recommend, because basically I don't see any other safe assets. Sure, the house that you live in, as long as it's debt-free and you don't see it as an investment, that's fine. But I don't call that an investment because it's going to go down, as I said, in real terms by gold by 90%. So that's that. But otherwise, I don't see stocks or bonds or property as a good investment. I don't trust the banks. I don't think they're going to survive. And if you have money in the banks anyway, it's going to be debased, so they'll be worth virtually nothing. So that's a dilemma I have, and I've had for quite a while. So therefore, I have obviously a very high percentage in precious metals because I don't know where else to put the money. But this is not something that I can tell other people. You should have all your money in precious metal. People have to make their own decision. They have to, because you shouldn't tell them. You shouldn't tell them anything. What I do when I meet people, I never tell them what's going to happen. I only outline, as I have done today, the risks. How I see the risks, and then if you do realize what these risks are, then you will have a high percentage in precious metals because, as I said, there is no alternative which is acceptable to me. But everyone has got to decide for himself. And I think if you have a good amount of spare cash, I think you should have at least enough in precious metals that you can live on it for a few years. That's the minimum. Everybody doesn't have that amount of money, but even if you have small money, you buy a few grams every month, and that will save you in the hyperinflationary period. So it doesn't always have to be at a high level. It can be at any level. I think I have a business which is, of course, involved trying to help people with putting money outside the banking system and putting it in safe vaults outside the banking system for wealth preservation purposes or insurance purposes. And then, yes, personally also, I have a very, very high percentage because I believe in what I'm telling other people. I believe that the risks are unprecedented, and I don't see gold as an investment. I do think gold and also silver. Silver is more volatile. That's why I don't talk about it as much. It's not make people a lot more nervous. But I think gold will outperform all other assets. But that's not why you should hold it. You should hold it to protect against the catastrophe in the financial markets that's coming and the debasement of currencies. And that's why you have to hold it and protect against worthless paper money that you will see unlimited amounts of coming out and being printed in the next few years. That's why you hold gold. And everyone will decide the percentage, but I think 10% is not enough in my view. It should be a lot higher.
Egon, that sounds like sound knowledge to me, like for sound money. Darryl?
Yeah, well, look, I'm all in, as and Brian similar, and I know that Mike Maloney all in the precious metals. I, like you, Egon, cannot see another market that has more appeal to me, that looks to me to be safe. And of course, gold has always been recognised as the safe haven investment.
Yeah.
So I don't want to be in, and because I think we all agree that we are heading into, there is no other option but to head into hyperinflation. And
you can just say, history is on our side.
yes, it is.
Gold is the only money that has survived in history. People must understand that. That's not going to change with cryptocurrency coming out, being around for a few years. So that's why history supports what we're saying.
Yeah, no, exactly. And, when we talk about currency and they talk about the US dollar, what's gold in US dollars? Well, who cares? Really, at the end of the day, speak to these guys and the average Venezuelan family and ask them, how much gold is in US dollars. Who cares? All they're concerned about is the fact that they can purchase 5 years worth of food with an ounce of gold. And so it's what you can do in exchange for your gold that's really important. And I guess that's why Jim Sinclair talks about having your own central bank, becoming your own central bank. So that, why do central banks own gold? Why do we believe there is so much gold at Fort Knox? Why is it so important for the United States of America to supposedly have 9,100 tons sitting in Fort Knox? Because it gives them power, influence, and it gives their currency value, if in fact they do own or have that much in their possession.
If they do, Darryl.
If they do.
Yeah.
So that's what we really need to do. And Egon, I think that's really what you're saying, to absolutely and totally protect your wealth, insure yourself. You need gold. There is really nothing else at the moment that protects like gold. So what I'd like to do here now is, if we could, Egon, is just ask you, and thank you so much for your contribution again. I mean, it's just fantastic. And, we consider you a really good friend, which is great as well, that we can connect with yourself at that level. What I'd like you to do, if you could at the moment, though, is just share, provide our viewers with some information, if you could, a little bit about Matterhorn Asset Management and Gold Switzerland. What do you do? How, if somebody's interested in storing their gold in the most secure vaulting system in the world, which is what you offer at Matterhorn Asset Management, what do they do? What sort of service can you provide them? If you could just share that with our audience, that would be great.
Yeah, just quickly. So I set up this company I had for a long time, Matterhorn Asset Management, and then we went into gold. But for ourselves and the friends that we advise, as I said, so we weren't even intending to open it up to other people. Then a few years later, around 2004 or 5, people are asking, can you help us? So then we opened it up and became a regulated company in Switzerland. We're based in Zurich, called Matterhorn Asset Management. Gold Switzerland is our website is called goldswitzerland.com. That's our URL. And on that site, you can, so we help people at slightly higher levels. So we start now, we raised our minimums. We had at 400,000 Swiss francs or dollars to US dollars, the same. So the most important vault is a vault in the Swiss Alps, which is the biggest private gold vault in the world, and the absolutely safe. It's a James Bond experience to go through all the security stones there, and it's nuclear bomb proof and gas attack proof and earthquake proof. So it's a very special vault, but that there right now the minimum is in the millions there. So we cater for bigger investors. We have an associated company that can take care of smaller investors, or you have people like yourselves to do that also. But so we have clients in all around the world. But it's a passion for us, especially for this. This is not a business. This is a passion to help the few people, the 0.5% of world financial assets in the world that today are actually looking at gold and investing in gold. So it's a passion to help these people. And the interesting thing is that almost everybody of our investors or our clients are extremely nice people, because they're not masters of the universe. They're not big-headed. They are humble people who understand what's happening in the world and want to protect against that risk. And that's why I enjoy so much talking to these people and talking to people like yourselves, because you meet people who are extremely nice people in this industry, who are people who understand and are humble people, and that's what I enjoy. And people who also have actually look at the world and don't believe that things grow to heaven forever, out of the sky forever. So this is why it's such a pleasure to be in this business and helping a few people. Although sadly, the world we're expecting is tough. It's going to be a difficult world, but at least we're doing a service for a few people who want to be helped. So we are very privileged to be able to do that, and privileged to talk to people like yourself who have the same views.
Thank you so much for that, Egon. And look, I'm sure there are a number of people out there that have been listening in today or this evening that would love to take advantage of what you have to offer. So I've got to say, look, I just really enjoy chatting with Egon. I mean, I could sit here for hours and chat. I would love to do that, but our viewing audience might think differently about that.
Absolutely.
But, look, once again, Egon, look, I can't thank you enough for being prepared to put aside your valuable time and supporting this channel as you do. Really appreciate it. And I could, at this point, the only other thing I've got to say, Brian, is that once again, I'd love to thank our viewing audience, our subscribers who support us in the manner that they do. We feel quite privileged there as well. And so for the moment, until next time, stay well, stay focused, and bye for now. Thank you again, Egon. Thank you so much.
Bye for now, Egon.